Asia is becoming the center for metals trading. Europe, and particularly London and New York, as each day goes by, is becoming less and less of a force. And with that, their ability to bring the market down and keep it down, suppress the market, manipulate it, whatever anybody wants to call, is lessening.
You're watching Silver News Daily. Subscribe for more.
Did you know that a single number could hold the key to a global financial shakeup? Silver, often overshadowed by its shinier counterpart gold, is on the verge of something extraordinary. Experts believe that if silver crosses $36, it won't just be another price move. It could ignite a global metals rush. Skeptical? I get it, but stick with me. What's happening behind the scenes might just blow your mind. And by the end of this video, you'll understand why $36 is more than just a number. Let's dive in.
It's a very viable number in 2025. We're going to have to start to see some real mainstream interest come in. Because remember, we rose in 2024 with liquidating of exchange-traded funds and other things related to gold and all. And one of the main reasons for that was, and particularly in the junior mining sector, the cryptos were eating their lunch. And the crypto market has sent, there's so much money being lost. People hear about one or two that are going up. They don't know how many fail and get lost at. But the crypto market in general, I think, is way overvalued. I think this will be the year that they come back to Earth. If not back to Earth, certainly back into the orbit of Earth. And that'll help money go towards the metals. And that's what silver is going to need, Elijah. Now, people get mad, and they're going to get mad when they hear me say this again, because I said it for 25 years, even when I was bullish on gold. And the silver bugs at a conference came up to me as soon as I was done, and he told me 1,000 reasons why I was wrong. But silver remains still like kissing your sister. It hasn't been able to separate itself from the chains that have kept it down. Now, you can talk about manipulation. You can talk about all the stuff. You can talk about a much better fundamental story for it. But until silver can get above $35 or $36 and stay there for more than an hour a day or a week, it's mirrored in this, the talk about it is a lot higher than the reality of it. And so I still think silver will still be second choice among metal investors. But I think as gold, which could start off the beginning of the year, particularly if he is going to go through with all this tariff stuff and everything, may see a little weakness. But I think as we get into the second half of the year, both silver and gold should overcome. Gold should overcome its high of this year, and silver should finally get above 35, 36 and really start to take hold. And maybe even as we get into that next year, even start to lead gold.
Silver has been making headlines lately, climbing steadily and trading just above $30 per ounce. This isn't just another fluctuation. It's a sign of something much bigger brewing. Let's break this down. First, silver's recent price movements have caught the attention of traders worldwide. Riding along its 9- and 14-day exponential moving averages, it's establishing a strong bullish momentum. The $30 level has proven to be a psychological barrier, but with silver pushing past it, we're now eyeing the next critical resistance at $31. Why does this matter? In financial markets, resistance levels act like ceilings, price points that are difficult to break due to psychological and technical factors. For silver, breaking $31 could set it on a path to $36, a level that hasn't been breached in years. And here's where things get exciting. $36 isn't just another number. It's a tipping point that could unleash unprecedented market activity. Now let's talk about what's fueling this movement. Silver's Relative Strength Index, RSI, a key measure of price momentum, recently climbed above the neutral 50 level. This indicates growing confidence among traders that silver's upward trend isn't just temporary. Combine that with its steady alignment along key moving averages, and you've got a recipe for sustained bullish activity. But here's the kicker. If silver can decisively break above $31, it could trigger a wave of technical buying, pushing prices even higher. And this brings us closer to that elusive $36 mark, where the game could truly change. But before we dive into what happens at $36, let's take a closer look at the bigger forces driving this momentum.
Same type of percentage gains. It's not called to be that, and it may not be in the best interest to just go up straight up, because it could set up for a much larger correction or decline than would be necessary. But I do think it's important to understand why. And it's Monday morning quarterbacking, but it's always easier to be a Monday morning quarterback than a Sunday afternoon quarterback. So it's clear and obvious that the main thing that drove gold higher was central bank buying. And then you have the question then is, well, why were the central banks such aggressive buyers? They're doing it for absolutely a couple key reasons. One is that they recognize that there's too much debt in the world. There's going to be a tremendous restructuring someday. Paper assets, are especially in the U.S., got way overpriced, and therefore gold will serve a very useful purpose. I think that was their first thing. But I think the second thing is, particularly in certain countries, is as much as people, when Trump got elected, and all of a sudden everybody said, oh, the BRICS are dead because he said, I'm going to put tariffs. BRICS aren't dead. You'll see that come the fall. They're not going to get into a verbal battle with him right now and all, but he's going to have so much on his plate, Trump, come next fall. I don't think the BRICS are going to be anywhere near the top of his list. But that is the reason also, because those countries and the formation of that recognize that the dollar's days are numbered. Yes, it's still the best of the worst of the currencies at the moment, but the fact of its usage continues to drop worldwide, and all the other issues they're going to face, that minimally these countries are going to set up some sort of trading system within themselves and use gold in some form to give confidence to what will be a new currency or some sort of system that they will use. I don't think they fully have made up their mind yet. They bounced around with it, but I think that's the reason. And so while I continue to expect central banks to be buyers, I don't expect them to be as aggressive as they were. And in order to propel us to the 3,000 number, which I still think is...
Why is silver rising when so many other investments seem stuck in neutral? The answer lies in its status as a safe haven asset. During times of economic uncertainty, investors flock to assets they believe can preserve value. Gold is the classic example, but silver is increasingly stepping into the spotlight. Let's look at what's fueling this demand. Inflationary pressures, geopolitical tensions, and a slowing global economy have all made silver more attractive. For instance, fears about the Federal Reserve's interest rate policies and potential recession scenarios have driven many to seek alternatives to traditional assets like stocks and bonds. Silver, often referred to as gold's more affordable sibling, offers a way for investors to hedge against these risks without the high price tag of gold. But here's the twist. While gold often takes the lead, silver's dual role as both a precious metal and an industrial metal gives it unique appeal. As the dollar weakens and treasury yields remain volatile, silver benefits from being seen as a hedge against currency devaluation. And let's not forget its liquidity. Silver is easier to trade in smaller amounts, making it accessible to a broader range of investors. What makes the current environment especially interesting is that silver is holding strong even against headwinds. Rising treasury yields, which typically weigh on precious metals, haven't been enough to derail its upward momentum. In fact, the safe haven demand for silver is so robust that it's offsetting these challenges. The key takeaway: silver's safe haven status isn't just a historical trend. It's a modern financial reality. This rising demand is creating the foundation for silver to push through resistance levels, bringing it closer to that critical $36 mark. But there's another factor at play that could supercharge this movement: silver's industrial demand. And that's what we'll explore next.
I'm in the camp, and I'll get back to inflation in a moment. Remind me in case I forget it. But there's three factors that have me most concerned about. I just wrote about it in our New Year report and all. The first is, and all these three, I don't believe Trump can overcome. As I said in my report, we're going to need divine intervention to fix these three issues. The first is the continuing debt spiral. We are just spiraling out of control on debt, not just on the national level, which we now know is 36 trillion, but on state and local levels, corporate debt, consumer debt, and there's no sign of any austerity or to bring that into control. In fact, I think an argument can be made that we may see spending even ramp up through the Trump administration for certain things and all. Second, retirement crisis. Bring this up again. 2/3 of Americans are working paycheck to paycheck. They're never going to be able to reach those beautiful ads we see about how you come to us and we make you live happily ever after playing golf and sitting at a pool or whatever for the rest of the year. Natural life. And it is getting worse by the minute. It is putting 1 out of 2 Americans, the bottom 50% of earners, 50% of them, or 25% of the entire workforce now is using credit cards just to pay for day-to-day necessities. That cannot continue. You can just see the reports of the credit debt defaulting on cards, car payments now is just ballooning up. The bulk of Americans are struggling or falling. They're not moving up. There is that class, and Wall Street only deals with them, so they think in that bubble, that's how the world is, but the real world isn't that way. The third one is what's no one's speaking about now, Elijah, but I hope you people mark this down because I think in the next 12 to 24 months we will. And that's the
Silver isn't just a store of value. It's a powerhouse in the industrial world. And this dual role is driving demand like never before. From cutting-edge technologies to renewable energy, silver has become indispensable. And this growing industrial demand is a game changer. Let's start with one of the biggest drivers, renewable energy. Silver is a critical component in photovoltaic cells used in solar panels. As governments and corporations worldwide commit to ambitious climate goals, the demand for solar energy has skyrocketed. In fact, silver demand from the solar industry alone is projected to rise dramatically in the coming years, reinforcing its role as a cornerstone of the green revolution. But that's not all. Silver is also a vital material in the production of electronics, medical devices, and even electric vehicles. Its unmatched conductivity and antibacterial properties make it essential for high-performance applications. As industries like healthcare, technology, and automotive expand, so does their need for silver. And here's the kicker. These industrial applications are not just supporting silver's price, they're putting upward pressure on it. Unlike other metals, which are often recycled and reused, silver's industrial use often leads to permanent consumption. This reduces available supply over time, creating a scarcity effect that further boosts its value. Now, let's connect the dots. With silver's price hovering around $30 and its industrial demand surging, this sets the stage for a breakout. Investors are not just betting on silver as a safe haven, they're banking on its role in powering the industries of the future. The industrial demand for silver isn't just a supporting factor. It's a driving force that strengthens its case as a top investment. But as we move closer to understanding silver's potential to break $36, there's a crucial piece we haven't discussed yet, the role of market forces in manipulation. That's coming up next.
Let's get more ammunition to play. That's the only way that I see gold coming down 10% or more in 2025. And it wouldn't be for a long period of time. That's what we lean in. I don't think a stock market, now if the market crashed 5,000 points, people liquidate everything. But I don't think that's the case. But I do think this, the giddiness, the complacency, the overvaluations of U.S. equities compared to everywhere around the world, even the comparison to small caps or value stocks compared to these thin amount of stocks that have been leading the market are all dangerous signs. And I think we don't need a big decline. I think if the stock market just went sideways, that's bad for some people, Elijah. And here's why. 7 to 8 out of 10 families that I still see in our planning group, from day-to-day workers still up to people with businesses and multimillionaires, they're living one lifestyle at least above where their finances are. And one of the things that's helped support that is continuous gains in the stock market, unusually high gains. And they've gotten accustomed to that. In fact, if you say to people now, I think the market will go up 3 or 5%, 3 or 5%, that's nothing because they've been used to double digit, but they're living a lifestyle that needs that double digit. So it's not so much that the market goes down a lot. It's if the market just doesn't go up a lot, could change things and radically make differences in markets. And these are things that I will just tell you. And this, I get nasty emails from young financial advisors. And you must have been young at one time, they would write. But this is the truth. Almost half of all licensed financial advisors now weren't born when I started in the business. And the reason I bring that up is not to tout my own wares, but to say that experience is always critical no matter what you're doing. And a lot of people giving advice now have basically been in a market that basically went one way, Elijah. It never went two ways. It might have got disrupted from going up for a while, but it never went down and stayed down. Forget even about going further down, just stay down. And it's really given a sense of invincibility, or that that's always how it's going to be. And their clients are also being groomed that way, or thinking that way too. And that's why I say it's not so much as the market falls, it's if it doesn't go out up a lot, that in itself can put pressure on the market.
Silver's price movements aren't always driven solely by supply and demand. For years, there have been whispers, and sometimes outright claims, of market manipulation keeping silver undervalued. Whether you call it suppression, manipulation, or strategic control, the idea is that powerful players may have an interest in capping silver's potential. Let's unpack this. Historically, silver has often been called the most manipulated market in the world. Some point to large institutions and entities with significant short positions in favor of silver market as culprits. These players allegedly use futures contracts to suppress the price of silver, ensuring it remains low enough to protect their broader financial interests. One of the most cited examples is the COMEX, a major commodities exchange where much of the silver trading takes place. Critics refer to it as the Grandich because of the alleged role it plays in enabling manipulation through unbacked contracts, essentially promises to deliver silver that far exceed the actual physical supply. This allows traders to exert downward pressure on prices without physically owning the metal. But here's what's changing. The power dynamics in the silver market are shifting. With the rise of Asian markets as dominant players in metals trading, the stranglehold of Western institutions on price control is weakening. Unlike the paper-heavy trading culture of London and New York, Asian markets are driven by actual physical demand. This means that as these markets grow in influence, silver's price is increasingly reflecting real-world supply and demand rather than speculative manipulation. The result? Silver's resistance at $36 could become a turning point where manipulation fails to hold the price down. If the metal breaks through and sustains this level, it could mark the beginning of a massive rally as suppressed prices finally align with true market dynamics. And this isn't just about speculation. It's a sign of the growing democratization of silver. But there's another critical force at play that we need to consider: the weakening U.S. dollar and its impact on global metals. Let's explore that next.
I don't think, unless there was a crash, I don't think gold gets impacted to the negative side to any degree. But where I do think what's important, and this has been the concern, think about this, as you know, just before Thanksgiving, we normally enter what I like to call the say no to bah humbug season, where the people on Wall Street don't even dare allow anybody to talk negatively between Thanksgiving and New Year. And then, of course, when we get to Christmas, we get the Santa Claus rally fable. Well, we actually went down during the bah humbug season. And then we started the Christmas and we were down 300 and something on Friday. And as I speak at the close Monday, not too far from the close, we started the record. We were off a few hundred points again in the Dow. So now the Santa Claus rally is in trouble. So the only thing left is the excitement right after the election that, I call it the coronation that some are viewing it on Wall Street if Trump is left. The thing that will take the stock market down is Trump having issues not getting out of the gate right, and issues suddenly doesn't look like there's going to be a lot of change right away. But the bond market, this is something that people aren't talking about. I shouldn't say that. There's some of the great hedge funds guys are. And that's why they're actually short the bond market. If you think about this, how many of us would have said, be honest with ourselves, that if the Fed cut interest rates by 100 basis points over a couple months' time, we would have said interest rates would have went up 100 basis points, not down 100 basis points. Fed cuts interest rates go down. Didn't happen. Key factor. And what's really interesting, if you look at especially treasuries, we're now in about the third or fourth year of bear market. We had a 40-year bull market in bonds from the day I entered in the early 80s, even before I entered the brokerage business. Bonds, interest rates were 20%. We already went down all the way to 1 or 2%. That's where gold could be soft in the beginning of the year, and here's how. If we start moving in earnest towards 5% on the 10-year, the dollar is likely to strengthen on that, especially in the interest rate differential where Canada and other leading countries are cutting rates and all. And that strength in the dollar could be reasons to some people want to liquidate gold or the short.
Silver's path to breaking $36 isn't just about investor sentiment or industrial demand. It's deeply tied to the global financial system, particularly central bank activity and the shifting role of the U.S. dollar. Let's start with the central banks. Over the past few years, central banks around the world have been aggressively buying gold to diversify their reserves away from the U.S. dollar. But here's the thing. Silver often benefits from gold's momentum. As central banks turn to precious metals as a hedge against inflation and economic instability, they signal a broader trend that boosts confidence in silver as well. Now, consider the dollar. The U.S. dollar has long been the dominant global reserve currency, but its strength has been eroding. Inflation, rising debt levels, and geopolitical tensions have all contributed to growing doubts about its reliability. Countries like China are increasingly looking for alternatives, and precious metals like silver and gold are stepping in to fill the gap. A weaker dollar is a double-edged sword for silver. On one hand, it makes dollar-denominated silver cheaper for international buyers, boosting demand. On the other hand, it reflects broader economic uncertainty that drives investors towards safe haven assets like silver. This combination creates a perfect storm for price growth. But there's another layer to this story. The U.S. Federal Reserve's interest rate policies are closely watched by silver investors. If rates stayed high, the dollar could gain strength, temporarily weighing on silver prices. But if the Fed signals more rate cuts in response to economic pressures, we could see a significant drop in the dollar's value, further driving silver's price upward. So what does this mean for the $36 level? If central banks continue accumulating precious metals and the dollar's decline accelerates, silver could see the sustained momentum it needs to break through this key resistance point. And once that happens, all bets are off. But the dollar and central banks aren't the only factors at play here. Let's dig into the expert predictions and contrarian views shaping silver's future in the next section.
And then there's a third, and this is an important thing. It's not spoken a lot outside of the people that make a living in it or day-to-day investing in the metals, but it is an important fact. Asia is becoming the center for metals trading. Europe, and particularly London and New York, as each day goes by, is becoming less and less of a force. And with that, their ability to bring the market down and keep it down, suppress the market, manipulate it, whatever anybody wants to call, is lessening. As you see, we still have these one-day wonders. We see it wasn't too long ago, we had an $80 or $90 down day. But within a few days or no more than a few weeks, we're above where it fell from. That years ago took weeks, months, or years to do. And the reason is that in Asia, the difference is there's serious physical buyers of it, not these paper pushers that existed in London and New York. And I'm not the first to call the COMEX the CRIMEX, and I won't be the last. But the bottom line is they are not going to have the influence on the downside. Now, let me just say this, and this may send your people into a little tizzy, but not to get too concerned about it. there is the possibility, because you made a very good point, we worked for the series of higher lows. There is a possibility that gold could retreat as far back, not saying it is, 2,300 and change, and it would still be in a major uptrend. Now, of course, that would shake everybody up and all, but I don't think it will get that far. I think the worst of the correction is $100 or maybe $150 from where we are now, at worst. Not saying it's happening. The upside still looks minimally 3,000. I just think that because that's a psychological number and all. There's no meaning to it because we've never been there and all. But I think that would be a big number. But one of the things, and you will be one of the people that will be able to tell people right away, if you start to see, wow, just Joe down the street has decided to buy some physical metals. It's not my hardcore, the world is coming to an end crowd. It's the typical person that a couple of years ago was buying a crypto or some corporate bonds and now calling me up to own some gold. And they may also go through the exchange traded funds and go that way as well. But we're going to need that switch in order to get to 3,000. I think it's coming, but we need that part in order to get there.
Silver's potential to break $36 has sparked a wide range of opinions from market experts. Some are boldly optimistic, while others remain cautious, highlighting the complexities of the market. Let's explore these perspectives and what they mean for silver's future. Peter Grandich, a seasoned financial analyst, has consistently pointed out that silver remains undervalued relative to its fundamentals. He argues that while silver has a robust industrial and safe haven demand story, it hasn't yet captured the mainstream investment attention it deserves. Grandich believes that once silver breaks $36 and sustains that level, it could finally move out of gold's shadow and attract a broader pool of investors. This shift, he suggests, could be the catalyst for a massive rally. However, not all experts share this unbridled optimism. Contrarian voices caution that silver's price has often struggled to maintain upward momentum after significant resistance levels. They point to historical patterns where silver flirted with key price points only to retreat under pressure from a stronger dollar, rising yields, or profit-taking. One common thread among skeptics is the concern over silver's volatility. While its dual role as a precious and industrial metal offers unique advantages, it also makes silver more susceptible to sharp price swings. For instance, if demand from industries like solar and electronics were to slow down unexpectedly, silver's rally could lose steam. But here's the twist. Many of these concerns are rooted in short-term thinking. Long-term investors, including central banks and institutional funds, are increasingly recognizing silver's role as a strategic asset. This growing interest could create a stronger price floor, limiting downside risks and paving the way for sustained growth. And let's not forget the retail investors, often referred to as the silver bugs, who have been holding onto silver as a hedge against financial instability. If these retail players are joined by institutional investors, we could see a wave of buying that propels silver to unprecedented highs. The takeaway: while opinions differ, the consensus is clear. If silver can overcome $36, it will signal a seismic shift in the market. But what happens once this critical level is breached? That's where the real excitement begins, and we'll explore it in the next section.
Thank you very much. Well, the first thing, which is the first one almost a lot of people can't get past, and that is you have to first decide, does God own everything or not? And if you struggle with that, then it's going to be harder to do the things that I speak about in the planning. But if you get by that, the second thing is the model that I've incorporated for over 20 years, but I live it every day myself, and that less is more. You have to spend less than you make. It's a very simple process. It's not what a lot of people do, but it's very, very important. It's economics 101. The second thing is, while debt is useful at times, remember, if you go back to what we originally said, that we built our financial planning based on biblical principles, there's not a positive verse about debt in Scripture. In fact, there's nothing but warnings about it. And we become a debt-laden society on every level. And I just think the less you have of it and working towards getting free of it, not only comes financial rewards, but a physical and mental relief that people that tell me that when they've done it, and I did it 20 something years ago, it's just a phenomenal. And then I think the other thing that's really, really important is to understand is it's not going to be how much you make, but how much you don't lose, which is going to separate the winners from the losers now. And the reason I say that is I think the big switch now for investing versus maybe the last 30 or almost 40 years, up until a couple of years ago, capital appreciation was an important thing in financial planning. There were a lot of opportunities to make money. It was good to take those chances. But now I think it's capital preservation. I think that's got to be more of an important focus. Not so much of what you can make, but how much you can't afford to lose. And the reason I say that is because the boomer generation is gotten quite old. I'm one of them. And that's where has most of the wealth. They will not have the time or the mental stability to make up for any substantial losses that could occur now. So I think we need to focus on protecting our principal or preserving our purchasing power and all. And that's where gold comes in. And people can argue all they want, and all the crypto people can say, oh, it's a relic and all this stuff. But somehow for a couple of thousand years of preserved wealth, and I haven't seen any reason yet to suggest that it's not going to do it for at least the next 10 or 20 years. But I think those are some of the important things now that financial planning should incorporate. And lastly, but most important for us, the key to successful financial planning is cash flow, not chasing net worth. Show me a successful business. I'll show you somebody that properly managed their cash flow.
Breaking $36 isn't just a technical milestone for silver. It's the gateway to a potential market frenzy that could redefine how investors approach this precious metal. Here's why. In financial markets, key resistance levels act like psychological barriers. Once breached, they often trigger what's known as a short squeeze. Traders who bet against silver by short-selling contracts could be forced to buy back their positions at higher prices, fueling a chain reaction of buying pressure. This could send silver prices skyrocketing in a matter of days. But the story doesn't end with short sellers. A breakout above $36 could shift the broader investment narrative around silver. For years, silver has been considered the underdog of precious metals, overshadowed by gold, but crossing $36 would force institutional investors, hedge funds, and even cautious retail investors to take notice. In the past, we've seen similar surges with assets that break through critical price points. Think of Bitcoin's climb past $20,000 or gold breaching $2,000. The ripple effects of a silver frenzy would be profound. Exchange-traded funds, tied to silver like the SLV, would likely see massive inflows, amplifying the price momentum. Mining stocks, often considered leverage plays on silver prices, could experience exponential gains, drawing even more capital into the sector. And let's not forget the media spotlight. Financial news outlets would cover the silver breakout relentlessly, creating a self-reinforcing loop of interest and investment. Headlines like
Crumbling of infrastructure in the United States, whether it's roads, bridges, power, ability to move power, all of that, and the cost, the astronomical cost. Give you an example. Just here in New Jersey over the past few days, we've had 10 major water main breaks in key cities. Streets collapse, businesses can't work and all. The typical pipe of water pipe in New Jersey is 75 years old. Many of the bridges in the state of New Jersey were built for 5 times the amount of traffic go over them than any engineer when they first built that bridge years ago could have imagined would go through that. This is existing throughout most of the United States. The infrastructure problem. And what pees me off about this, I hope you don't mind me saying it that way, the original quantitative easing, when Obama announced out of the last financing with Bernanke, go back, read the news, was based on the fact that that money was going to go into fixing the infrastructure problem, which was already acute back then. Money never got there, stayed on Wall Street, never made it to Main Street, and certainly didn't make it into the infrastructure needs. So here you on one hand, you got this Wall Street talking about, AI and the need for this and that and power and all. I like to joke half of the power installations in some places, in some states, Thomas Edison installed them. I mean, it's very, very old and antiquated. And there's not any money to go towards that. So it's great. I understand why people got excited on the Trump win after the 4 years that we went through and all. But there are critical issues here, like I said, that without divine intervention, we are not getting away from them, and people are not prepared for them. So that arc that I spoke about in 2024 still needs to be built. And yet, people are delaying yet again because, they think the sun has come out again and the rain clouds.
Now that we've explored the dynamics driving silver's price, it's time to answer the big question. Can silver truly break $36? And if so, what happens next? First, let's consider the economic foundation. The weakening U.S. dollar and surging inflation fears are setting the stage for a global pivot toward tangible assets. Central banks are stockpiling gold and silver as gold's indispensable counterpart is quietly riding this wave. As trust in paper currencies diminishes, silver stands to gain as a dual-purpose asset, valued both for its industrial applications and as a store of wealth. Next, the demand-supply equation. Industrial consumption of silver is at an all-time high thanks to sectors like renewable energy and electronics. Unlike gold, much of the silver used in industrial processes is non-recoverable, reducing overall supply over time. Combine that with growing demand for safe haven investments, and you have a perfect storm for higher prices. But what about the market itself? The transition of metals trading dominance from Western to Asian markets cannot be overlooked. Unlike the COMEX-dominated paper trading, Asia's markets prioritize physical silver. This shift is already reducing the influence of short selling and market suppression, making it increasingly difficult to hold silver prices down artificially. A breach of $36 would signify the breaking point for these market dynamics, unleashing a flood of organic buying activity. And then there's investor psychology. $36 isn't just a number, it's a signal. When silver crosses this threshold, it will attract new waves of interest from mainstream investors and institutions alike. Just as Bitcoin's rise past $20,000 redefined its potential, $36 could redefine silver as a serious contender in global investment portfolios. So, could this really happen? The answer lies in the unique convergence of forces: economic instability, industrial innovation, shifting market structures, and increasing investor awareness. These aren't hypothetical scenarios, they're unfolding as we speak. And once silver clears $36 and holds that level, the floodgates could open, propelling prices into uncharted territory. For those watching from the sidelines, the choice is clear. Take action now or risk being left behind as silver embarks on what could be its most historic rally yet. And as always, remember to subscribe for the latest insights and updates on the precious metals market. This isn't financial advice, but the signs are all pointing to an extraordinary moment in silver's journey. Are you ready for it?